Hello, how are you doing today? Hope you are fine wherever you are. Welcome to yet another video, and today we are going to handle Cesim Bank round 1. And the most important thing that you need to do first is to check the market outlook, specifically all the items that are there that include economy, banking sector, and policy action, because this is going to give you the basis of how you are going to make your decision. So from the economy, you can see they are saying the SME sector is likely to grow. Export market is not clear, and also basic material and IT sector is particularly strong, but housing is still not that good, but the prices are expected to improve. And finally, the deposits or transaction flow is expected to increase by 20% compared to what we had in the previous round. And then when you go to banking sector, you can see that the credit losses are likely to go down, or they are likely to disappear all along. That means when losses are low, the likelihood of you making money out of credit is going to be very high, because the default rate are going to be very low. And then you can see they are saying that the export market seems to have a very good demand. Therefore, you can take or target that one so that you can maximize the money that you are making. And then they are saying that new fund partners and funds and partnership can be used to tap into the sources of organic growth. General labor dispute is also likely to be a problem. Therefore, when we go to personnel, we need to give them a better pay packages and also very good working conditions, so that you cannot have a problem with the labor unions, and also you can reduce the turnover rates. For policy, they are saying that while the key industry group have spent considerable time and effort in educating the regulatory official of the needs that banks have, some of these wishes are falling on deaf ears, and learners' time lay ahead. In upcoming few years, banks are required to put up more quality capital to support their base of risky assets. As additional notes, a refresh policy action by state to consolidate the expected growth path. A small decrease in the corporate tax rate has been enacted, and more importantly, the monetary authority has kept its very accommodative policy stance. Therefore, you can see, even though the policies are not clear, but when it comes to taxes, there have been a reduction in the rate. As you can see already, it has been indicated the tax rate have reduced by about 0.5 to be 24.5 compared to what we had in the previous round. When it comes to interest rates, you can see the reference rates. These are the basis rates that we use. They are same as the basic rates that are offered by central bank. Therefore, any markup above the basis or reference rate is what you can use to maximize the profit that you are running, especially when you are offering credits. So with that information, let us go to consumer report or consumer section. This is where we're going to start making our decision. And you can see for demand deposit, we have increased the rate a little bit to 0.18. And this is because we want to tap into that 20% growth in the transaction, so that you can maximize the money that is going to be stored in the bank, so that we can use those monies to borrow out and make money out of it. So with that, considering that we are not alone in the industry, we are just offering ourselves an estimate of 6% increase on the demand deposit. As you can see here, we have offered 6.0 increase in the market. And then when we go to fixed term deposit, you can see we have reduced the rates compared to what we had in the previous round, because for us to make money out of deposit, the rate that we are offering need to be lower than the basic rate or reference rate, and therefore we have reduced from 0.8 to currently 0.6, and we're expecting this one with a good market condition. The 12-month fixed deposit is likely to grow by a rate of 2%. And when we go to the 24 months, you can see unlike the 12 month, the rate is a bit more by about 0.1, because currently we are offering 0.7, despite it's a reduction from 1.2 that was offered in the previous round. Again, this is in line with what we want with our bank. We want to maximize the profit that we're running out of this one. Therefore, we are trying as much as possible to draw it closer to about reference rate that we are having. From the report, you can see the reference rate for 1 year, that 24 months, that is 2 years, is about 0.7. So we are offering close to reference rate, which is not a good one. So we need to make an adjustment here, because we want to encourage customers to actually put their money into a bank. So we can offer them 1.0 rate, which is a reduction of about 16.7 from what we had in the previous round, but it's okay for now. With this one, we are expecting that the 24 months fixed deposits likely to grow by 1.5%, which is okay for now. So now let us go to the credit products. From the information, you can see they are saying that the credit problem or the default rate because of good economics times is likely, the default rate is likely to go down. Therefore, the problem or losses associated with credit is likely to be very low. That one, we are going mostly to include that in SMEs. But for now, based on the reference rate, you can see here the mortgage 12 months, we are offering them at 0.95. Previously it was 0.75, but currently we have increased a little bit to 0.95. For mortgages, you can see that is 5 years, we are offering at 1.35. Remember, the reference rate is about 0.9. Therefore, we want to maximize the profit that we are running out of this one, and that's why we have 1.35. And then consumer loan 12 months, we are offering them at 4.0. These are risky loans. Therefore, we need to offer them at this rate so that we can maximize the profit that we're running, and at the same time we can reduce the risk associated with it. Credit card 12 month, the most risky one, you can see we are offering them at 4.5 compared to what we had in the previous year or previous round, which was 3.7. With this one, we are expecting the mortgages loan to grow by a rate of 7.0, consumer loan 12 months 5.0, and credit card 12 months 4.0. When it comes to lending terms, you can see for mortgages loans, we are expecting them, so we can reduce a little bit because the taxes have reduced by about 0.5, so we can have 29.5 here, and for consumer loan we can have 24.5. and then loan to value, the value that these loans we are going to have, or remaining value after we take the expenses, likely to have 70%. And then maximum loan maturity, our mortgages is 20 years. This is because we do not want to go further than 20 years, because that means the risk that we are going to have from this loan is likely to be very high. And then for credit card salary multiplier, this means customer can get 3 times loan from 3 times their salary when they take their credit card from us. For example, if they're running about maybe let's say 500, they can take as much as 1,500 from our credit card. And then provision for loan loss, remember they have said that the risk for default, we can just confirm. Let us go to Outlook. Now it's here, they are saying credit losses are likely to be they're likely to be history very soon. So that means they're going to be a thing of the past, so it's not going to affect our business greatly, and that's the reason why we are reducing provision for loan loss. So we can go as much as, let's say, 1.8. Although this is a very risky, but at the same time, let us just go with it, because they have said the problem is going to be a thing of the past. So most customers are likely to pay off their debt because of good economical times. Okay, so now let us go for net charge off. We can maintain the way it is, but now we can go to business sector. So under business sector, you can see currently deposit, I expected it to grow by 3%, and interest offer, unlike in the previous round, we have improved the rate a little bit by about 1 basis points. That's why you can see we have increased from 0.5% to 0.6%. And then when we go to loan terms, you can see we are trying to offer these loans at a very affordably compared to what we had in the previous round, and also the market, because you can see currently for less risky loan we are offering them at a rate of 1.7. The second category, which is AA, we are offering it at 2.0, which is very favorable compared to what we had in the previous round. And then A, we are offering at 2.5, which is a little more by 0.1 basis point compared to what we had in the previous round. And then BBB, we are offering them at 3.2, which is a bit more compared to what in the previous round. But also remember, they have said that credit losses are going to be very minimal. So there's no need for us to give a very huge provision for loan losses. So for the most risky, let us give it 2.5. And then the second category, you can have 1.8. And then AAA, let us have 1.2. And then for the growth, let us have about 5% for AA because of good economical times, and then maybe 4, and then maybe 3 for A, and 2 for the last one. Okay, so for target, you can see other lending terms, you can say it's balanced. We do not want to have strict because economical times are very good, so we can be quite lenient and don't pressure customer, because when you pressure them, maybe you can lose new customer. But at the same time, let us have it balanced so that in case of situation when some customer will not pay or struggle, we can be at least strict, but at the same time we can be friendly. And then competitive positioning, currently you can see for sector targeting, we are targeting export because they are saying it's going to be a very lucrative market. And then SME growth, we are catering for the most needs because currently we are just starting, so we cannot go specifically, but catering for the most to the most need means that we are going to have a very huge sector or very diverse market that we can utilize, and that is going also to reduce the risk associated with or which is systemic to particular sector. So we can go the way it is, as the way we have said. So the next thing that they have touched is the personnel. And you can see here, we are trying to offer average wages plus 15% increase, and then performance pay, modest performance pay up to 20% of wages. And then when it comes to training program and priorities, you can see sales, development, and product and services. Both of them, we are utilizing them. And then for training time per new employee, we have 30. Training time per old employee, we have 15. And then we are also increasing the number of employees, and this is going to cater for any additional demand that's going to be there for our services. For retailer, we have increased to 55, and then for SMEs, we have increased to 30, and then bank offices, we have maintained at 15 at current, the way it is currently. Maybe we can improve or we can increase in the coming round, but as it is currently, it's just okay. Okay, so that's all for personnel. And remember, we are doing this to make sure that our employees are happy, and also we try to avoid having problem with the labor unions. And then the next one, we have the risk. Currently, you can see we have increased the risk management budget from 500 to 650, and then overdue credit allocation. People, we have increased from 10 to currently 11, and this is going to assist us to recover any loans that customers are having difficulty to repay. So this is going to just follow through and make sure that the efficiency level in debt collection is very significant. And then when we go to treasury, there's not much we are doing here. In case we had excess reserves, we could take advantage of interbank lending and get some additional money. So if next year we're going to have some extra reserve, we are going to utilize it so that we can maximize the profit that we are running by also borrowing money to other banks. Okay, in case you have any question or you might need someone to complete your simulation, kindly reach to us and we'll try to get back to you as soon as possible. In case you will need to access the other video, because we have a series of video for Cesim Bank, that is for Cesim Bank round 2 through the final round, you can check the video description to get the link to where you'll be able to access this video. That's all for today. Have a nice time.